Welcome back to our second panel discussion called DeFi, Payments and Data, Building a Decentralized Future. This panel is hosted by Michael Steven, product owner at Entity and a true DeFi expert. As before, please submit any questions to the panelists in the Zoom chat. So please welcome Michael, the stage is yours.
Thank you. Thank you for the warm introduction and welcome everybody to the second panel at the Entity Builders Forum. So to begin, we would like to say that this panel is dedicated to a topic that we all love, but we all wish we knew or understood more about, which is DeFi and payments and data to top it off. Today, we'll be trying to shed a bit more light on this topic, and joining me in that mission are the following guests. Martino Aragao, Chief Product Officer at XMoney, Edward Onech, CEO and co-founder at Zoidpay, James Davis, Chief Product Officer at TX25, Mark Paul, CEO and founder at Ethereum, and Ahmed Sagini, CEO and co-CEO at Haton Protocol. Welcome, everyone, and glad to have you here on this panel. So a warm welcome to all the panelists. And to begin with, we would like to start with a question that we all kind of seen gaining traction on everybody's minds, which is CBDC. How do you see them influencing the development and adoption of DeFi applications, and what opportunities do they create for driving mainstream adoption of decentralized finance? Do we even consider it as DeFi or CDeFi if a centralized currency is used inside DeFi protocols? And I would like to start with Martino, since XMoney is focusing on both these topics, and maybe it would be interesting to hear your opinion first.
And thank you for inviting me. So I think there's still a lot of uncertainty regarding CBDCs for multiple reasons, one of which is that there's not going to be one CBDC necessarily. And so each implementation might have different struggles, barriers, and opportunities as well. And depending on that, the connections and everything will be different as well. I think it's not possible to really call it DeFi from the moment that it's called central bank digital currency, perhaps CDFI and etc. But I think from my perspective, the most interesting thing about CBDCs is that they're going to bridge the barrier of interoperability between crypto and fiat. So the fact that we're discussing implementation of a digital currency, potentially using blockchains and etc., would mean that it will be easier to make connections between the existing cryptocurrencies and the existing frameworks and chains and the digital currencies. And that is not something that until now has been easy, and that we obviously in XMoney have to deal with that because we are trying to make this bridge between these two worlds. And the CBDCs would allow and make it easier, at least, to make this connection. And potentially then we could start seeing DeFi using virtual concepts of CBDCs, which right now we basically only deal with fiat on centralized exchanges. And I think that's where it will open up.
Thank you for the answer. So this is on open floor if anybody wants to add anything else, but I really think that's an interesting twist and that's an interesting perspective. And I really do think that CBDCs will at some point blend in, even though not that seamless. We've already seen some examples of CBDC with banks from France and other countries that have dived a bit into the world of DeFi on Ethereum, but it's only small steps for now, and we don't know what will come.
Sure. Maybe I'll just chime in with a few comments. So firstly, hi everybody, great to be here, and thanks to Entity for organizing this and giving us the opportunity to come here and talk about these really important topics. So from my perspective, CBDCs are good and bad, right? Like bad in a sense, I think obviously it's centralized and obviously not censorship resistant, not transparent. I think a lot of the a lot of the stuff you see coming out about the CBDCs, the way it's implemented, it could be censored anytime. All of that stuff is bad, obviously, right? Because that's no different to existing financial systems. But in a way, it's good because it tries to make the space more regulated. If you see what's happening today, and if you see, it's crazy at the moment, right? Like, and it's all coming from the fact that DeFi has been operating like really interestingly, very, very decentralized, and that obviously, provokes a lot of regulators around the world. So maybe this is good, maybe this is bad. I think overall, it's good to explore CBDCs, but whether it's going to be what we think it is, I mean, time is probably going to be the one that directs us in that direction. So yeah.
Thank you for the answer. Yeah, go ahead, James.
I think there's some really interesting things that they're going to do in terms of raising the bar for other assets. So if we're thinking about how payment platforms are going to extend across many different countries, if we think about on-ramp and off-ramp work, we think about the basis for lending protocols, for derivatives protocols, for anything that needs to bring more people in, they will raise the bar in the quality of assets. And maybe that'll wash out some of those assets that are being used that, whilst they're decentralized, we have no transparency over what sits underneath them, or we don't really have an understanding of how the risk models work. Say some of the stuff that Aave is coming out with at the moment, we don't really understand how the mechanisms are going to work under a stress scenario if there was a run on that coin, and therefore they're preventing what I would constitute as real money from coming into the system. So what we all want is we all want to expand the size of the pie. We want pension funds, we want asset managers to be deploying into all of these interesting projects because the teams are interesting and the projects are interesting, and to not notice the mechanisms with which they're doing it, even if most of us are providing those. For that to happen, the bar of quality needs to raise, so it's a non-question. CBDCs will raise that bar. They won't necessarily be the answer long-term that the market uses, but they'll help wash out some of this and accelerate that process.
Definitely. Just to add an idea here, we also how in DeFi, even though everything is transparent, it's still a bit opaque in terms of the mechanisms that work behind the protocols. We all heard the expression magic internet money, and that's actually even a stable coin nowadays on Ethereum. And we can all see where this is heading. And we also a big example where what are the risks actually in DeFi with Terra Luna collapse. That was a clear example that these opaque systems where you don't understand where the yield is coming from or how these mechanisms are being covered and what risks are you exposing to can lead to this kind of systemic collapses, which while they do wash or clean the ecosystem, it's still a long run. And yeah, I think in one way or another, with CBDCs or without, governments will play a role here in trying to clear the space for the adoption that you have been talking about, James.
What I can say about CBDCs is that their introduction sparked significant debates, but I believe that CBDCs will not have a positive effect on DeFi applications and may even give rise to a multitude of challenges. Like, one of my main concerns with CBDCs is the potential loss of decentralization and autonomy within the DeFi ecosystem. So DeFi, as its name suggests, operates on the principle of decentralization and trustlessness. It aims to eliminate the need for intermediaries and give users full control over their funds and decision-making. However, like, once an entity gains the power to lock or control funds, the essence of DeFi starts to fade away. So it transforms into a system where a central authority becomes the sole arbiter, like undermining the core principles that initially attracted individuals to DeFi. So CBDCs, they are likely to encounter a range of problems in the long run, which could further highlight the advantages of DeFi applications. Like, the primary objective of CBDCs is to digitize traditional fiat currencies, essentially trying to replicate the existing banking system on the blockchain. But Bitcoin was not created to replicate the traditional banking model. Like, it was designed to be decentralized, censorship resistant, and a transparent form of digital money. So as central banks attempt to force-feed the banking system into the blockchain, they risk diluting the core principles of decentralization and immutability, which I believe are essential to the success of cryptocurrencies like Bitcoin and so on. Yeah.
Thank you, Ahmed.
I just want to come back on a couple of Ahmed's points, because that also helps the debate in these formats. But I think it's really interesting to look at it from that angle. But when we've got trading on Chicago Mercantile Exchange being 50 times more capital efficient than trading on Binance, we're not adding value to end users for them to be able to put money into purposes. And so if somebody is building a ticketing platform or operating museum and wants to use crypto around that in some sensible manner, then they need to be able to do that in a competitive way with the rest of the world. And at the moment, the solutions that are coming in are nowhere near good enough. Now, we're starting to put some of those building blocks in place. So by having some of this come in and force those ramps to lift the game and enabling more money to come into it, I think that brings more money into the ecosystem to do this innovation and to be able to then lift the game. I don't think the end conclusion will be a CDBC, but I think they're going to drive money into the system. And a lot of free money means a lot more innovation, means a lot more progress. This is still, in internet terms, this is still 1997. We're still wondering how Netscape's going to grow. We don't have an Amazon, we don't have an eBay, we don't have a PayPal. You know, but Binance is mosaic. It is not yet got huge adoption. The financial markets are so much bigger than us. It's mind-boggling how much bigger they are. You know, this is a rounding error from that perspective. We're a rounding error compared to the gambling markets in terms of regulation. There's loads that we're going to be able to do, but we've got to find ways to reduce the barriers for people to bring money in and invest and support all of these fantastic projects that we know that are solving real world problems. And when they solve enough real world problems, the rest will grow.
Exactly, yeah. And at the same time, I mean, we're really early on the adoption curve. I mean, really early. And when you think about CBDCs acting as a gap between, let's say, regulations and innovation, but at the same time, they also provide a layer of security for people that don't know what crypto is, don't know what blockchain is, because they see the resemblance between what they do in traditional finance and what they are seeing on the blockchain, on different decentralized exchanges. And it can provide a layer of security and at the same time the liquidity that James was talking about. So yeah, it's an interesting use case of CBDCs, but I think to be honest, I think they will play a bit the role of the Trojan horse, but the reverse, acting as a adoption mechanism for people that are non-crypto. So it should be interesting to see what happens.
Definitely, and to keep discussing on that point a bit, and I want to redirect another question to you, Edward. I think we have been discussing about CBDCs and central banks as kind of a standalone part, and we see them being there. We are somewhere here in our own ecosystem, in kind of our own bubble. And not so often we see steps of collaboration, of trying to open the discourse, even though we are met, when we do open the discourse, we are met a bit with hostility, as we have seen with recent regulatory enforcement from the SEC, but that's another topic. But what can we do, or what steps should be taken to foster these collaborations and maybe even coexistence between these entities, central banks with CBDCs and DeFi ecosystems? Can this be even achieved, or is something that we all want to dream about, as we do far too often in crypto?
Yeah, that's a good question, and I think yes. I mean, we've seen it here in Romania. The central bank has a special department for blockchain innovation. And we have let's say a channel of communication between us as blockchain projects, crypto, and the central authorities. But at the same time, I think it's like the big corporations. When you become really big, you have so many flows and you have so many departments, and the chain of command is so complicated that you cannot take decisions fast. Yeah, for this to happen, there needs to be a startup approach, an agile approach. They need to have an incubator. They need to have something to create sandboxes, to do experiments, to have a back and forth, which is not, let's say, between I'm addressing a question now and the answer comes in the form of, I don't know, email, formal email after a couple of months. So there needs to be a constant channel of communication. And I think for the regulatory clarity and everything that needs to happen, other authorities need to get involved as well. So this should be a common joint effort, and it's based on history, actually. So people or countries that don't know their history tend to repeat it. So this happens in tech as well. This happened with the internet. This is happening now. And I think the most important, I mean, by far, is to find the balance between regulations, between innovation, between everything that stands for KYC, AML, and different financial, let's say, laws that surface now. But yeah, I mean, so far in Romania, we have a good framework that's prone to make things work. Let's see if this extends to Europe, at least for now.
Definitely. I think Mika, it's coming. We all know and we all are aware of that. We'll all try to explore all the angles that it offers and all the intricacies that come with it. But I do think it will offer positive development. At least it's clarity on the regulation front, and it's less chaotic when dealing with authorities. And I think this would speed up processes tremendously to get yourself licensed and to have like an approved, in a sense, an approved by the government almost protocol or utility of the token or use case, so that you can then safely go into the world, innovate, bring adoption, and then bring all this, the security that the users would like. Because as we've seen right now, for example, users in the US, they don't know where to store that asset when it comes to centralized exchanges. They don't know who is next. They don't know who is being targeted. And this causes a lot of uncertainty and causes like this rush to exit, like a bank run on all cryptos. People sell off, people fight to save assets, fiat, gold, even Bitcoin on, and they take it off exchanges. But far too often this leads to a slow in adoption, because people would be less likely to experiment and try out new things when they know that there's the possibility that they will be put a lock on the door and they will not be able to exit, yeah, in case they want to. So yeah, this is a topic of the topic of collaboration. I think it needs to be highlighted a bit more, because so far we have advanced in this in our space quite fast, and we kind of tend to leave the authorities behind and says, yeah, they are there, they are too slow, they don't understand. And we tend to think that moving fast will get us far ahead, so that we'll kind of become too big to not necessarily be regulated, but to be shut down, so to say, or to be enforced upon. So I think this is something that needs to be to change in terms of mentality. There needs to be a mentality shift. But looking forward to hear more opinions. So if somebody wants to chime in.
Maybe I will.
Sure.
I think If we look back into X-Money, and I'm more specifically talking about Utrust history here, at 2017 and even before that for other projects, we're already talking about regulations. So regulations were already appearing not only into terms of payments, but into terms of tokens and cryptocurrencies. So what I'm talking is that it's already been 6 years or more than 6 years where regulators have already been trying to apply and understand the industry. However, at the same time, the industry has been evolving a lot. 6 years ago, we didn't talk about DeFi specifically, and many other terms. We didn't even talk about Web3. But there were already frameworks to launch tokens and requirements to do KYC for investments and etc. The thing was that each country had sort of their own framework of adoption in terms of regulations, and that they were not extensive enough to cover for the industry that was developing. Now, as you were mentioning, MiCA, which is coming to be applied next year, if I recall correctly, I was looking at the main website. One of the main sentences that they say there is, MiCA will protect consumers against some of the risks associated with investments in crypto assets and help them avoid fraudulent schemes. And we've known as well that within the past year, there have been like more than 20 projects that collapsed, 5 of which extremely huge. And we were at a point where adoption was actually quite high. There were a lot of people that didn't understand anything of this industry that had invested a lot of their funds. And unlike other industries, we are a financial industry at the end of the day. So we do have a duty to try to protect, not try, but really follow some procedures to protect everyone who invests. And that is sort of a block towards adoption. So unless people feel safe and or can trust, then they will not rely on a system that might be better for them. But if it's not trustworthy enough, they'd rather keep it on banks, fiat currency instead, for example. But on the topic of collaboration, and as was being talked, for example, Bank of Romania, Bank of Portugal, the same. We have a license with the Bank of Portugal. So each country sort of has these frameworks, and I already see in many different countries as well, from this type of events, investment or physical, there's always presence now between these two, one more conservative and the other more edge type of development. And there is a lot of collaboration happening. The challenge is always still, what is the balance between regulations that allow for that innovation, but still ensure that we are protecting the users' funds and they are not falling into fraudulent schemes and etc. So this is going to be an ongoing thing forever, because that's what regulations are. Whether on payments, whether it's PayPal, Stripe, something else altogether, there's always new things happening and new changes that need to be done. But we are at the stage where now it's really critical until, especially next year with the application of MiCA. So when that happens, we will have a much more stable framework, which might limit some projects, but that's the balance. And that balance might mean protecting the users and thus enable to bring actual mass adoption of protecting the user funds.
Definitely. Thank you for sharing the thoughts with us. I do think that, yeah, MiCA would bring, I'm proud to be an optimist and think that MiCA will bring a lot of positive improvements and more clarity than to bring limitations. But I'm aware that some of the projects might find MiCA as a barrier to adoption or to at least their particular use case. But as all things in life, you have to take the chances to build and to innovate and navigate as much as possible the regulatory space. Thank you, Martin.
If I just make one more comment on that. So, I mean, the regulation side of things, we've spoken about that, but I think what's interesting to me would be the fact that maybe adoption of the technologies, right? Like as an example, if CBDCs do get enforced in different parts of the world, they're going to have to store that in some form of a wallet. And clearly, if you're trying to attract the masses, you can't use the wallets that you have today because the user experience of these wallets are horrible. So I'm guessing the wallet infrastructure would have to improve. And this might, in fact, help all of us in DeFi and other projects who are more centralized, because we are stuck now with this user experience problem of onboarding more users. Maybe CBDCs would provide us a boost in the user experience. That's maybe a different way to look at this as well.
Definitely. Thank you for the intervention.
Just to extend the early internet time, we need that browser. That's the same thing you're talking about there with the wallets. The tooling that brings mass adoption is going to be good for all of us, and we need more of it.
Definitely. And to add a bit on top of that, I think I saw a very interesting discussion about how we perceive things on the language level even. So when we talk about wallets, we'll all think of something where we store something of value. But far too often, wallets mean much more than that. They become digital identities, and they become like this footprint that we have online, which is very, very interesting to approach it even from the language perspective, to kind of rename the wallet to something more appropriate that kind of serves, at least for the retail users, to educate them or to give them the impression that something is moving into a different direction, that it's more inclusive towards other trends. Because when you're talking about NFTs and arts, it's like when you mention a wallet that you're storing your art inside the wallet, it kind of becomes a bit funny to think about it. So it's like, what if we changed the mentality? So instead of like a wallet, we say a gallery or something like a storage room, and that becomes more appropriate. So that's also, I agree here that we need better technology that fosters mass adoption. So I do think that this is an area that we would like to explore. And I think all here around the table would like to see more innovation upon. So I would like to speed things up a bit and move on to the next question. And I would like to address it to Mark. Since we are talking a lot about data safety and transparency and transferring data in an equitable manner, and even monetizing it or giving monetization back in the hands of the people, here we focus. I want to focus a bit on financial data, as we all have a digital financial footprint. How can we claim ownership and control to who has access to our digital financial footprint? And can we have a future with private DeFi even? I think that's an interesting thing to explore. And I've seen some mentions throughout the ecosystems, but I would like to see what they think on this topic. What is the future?
Yeah, sure. So, I mean, if you look at DeFi right now, right, like it's been around for 10 years plus, it's the same experience for everybody. Like if I go into Aave or I go to Uniswap, everyone's getting the same experience, right? And the reason, and then let's now look at, you go into Binance or you go into a centralized financial platform, it's very personalized. So you can see the huge difference in user experience there, right? And obviously the reason this is happening is because the centralized platforms are using your data to personalize the product offerings to you. And if you look at it from two ways, in a positive light, when you go to these centralized financial products, they're serving you things that maybe you're more interested in and probably better utilize your time. In the negative side, they're doing all this by taking all of your data, right? So that's effectively the pros and cons of them taking your data. Now, if we want DeFi to get that sort of personalized experience, at some point we have to solve this issue of having this one experience for all in DeFi, which is really not that great. So would it be great if we log into our favorite DeFi platform and somehow it's able to ask us for consent for our data and then personalize the experience? Maybe the pools change, maybe the farms change, maybe the yields change better based on my experience. So that's really, really the powerful thing here. Like, how can we bring personal data into Web3 to follow the principles of Web3? In other words, let the user own their data, let the user own their identity, and privately share that consent with you. So I think from our perspective, like ETM, we consider data just to be another asset, just like your financial assets. Data is another asset. So same rules apply. If you want You want your users to own the data. You want them to give you consent. You want them to be able to revoke consent. But we want this data to come into Web3 because then it personalizes the whole Web3 experience and brings it more closer to the Web2 experience, which is really great, but it's created by them harvesting our data. So we have to like level the playing field. So yeah, I mean, we're very excited about the technologies that treats data like an asset, and therefore you can apply the same tokenization rules. So you can, for example, look at data consent as an NFT. In Ethereum, we call them data NFTs, right? Consent, continuous licensing for data. And we bring all of these sort of tooling with the ultimate goal to let a user bring their personal data into Web3, just like how they bring their DeFi assets into Web3.
Definitely. Thank you really very much for the insights. And just to add on a bit on what you just said, I think it can even go even one step further. We can even create decentralized finance that is tailored to the user's transactional history, so to say. Seen some protocols try it across the crypto ecosystem to kind of create like this lending platform that kind of took on-chain data and compounded the credit risk score, so to say, from on-chain.
Absolutely, man. Yeah.
So that is a really powerful innovation, because then DeFi becomes tailored to what you have done in the space, tailored to how you interact and how good of an actor you are in the space. And this really creates a new innovations, and as James pointed out, a bit more capital efficiency, because we all love to be efficient as much as possible, and we all love to use these innovations available and to use our data, which is on chain, and everybody has access to it, to build out more and to create out more. So
so on-chain is great, but you can also bring off-chain data and bring the proof of that on-chain. So you can do things like you just mentioned, right? You know, under collateralized loans in DeFi, which requires proof of credibility, proof of reputation, proof that you're not a bot, which is a huge problem. So I think if we can bring on-chain data history, attach it to you as an individual, and then even your on-chain history, and attach the proofs, and then you carry it in your wallet like you carried an NFT, that's really powerful when you think about it.
Definitely. Okay, and if anyone wants to add anything else on this topic, feel free to jump in.
Yeah, actually, so a couple of months ago, we were discussing with Mark regarding ZoePay. So it's interesting because we're talking about CBDCs, we're talking about data, we're talking about privacy. Now we're in the process of actually acquiring a brick and mortar bank with subsidiaries and everything. And it's been a headache. I mean, we thought it's going to be easy, but boy, we were wrong. I mean, it's really, really difficult. And one of the main reasons we're doing this is to actually showcase all of the innovation and all of the tech we've been building since 2017, especially on the financial side, and a way in which we can actually transition traditional financial services to DeFi services. One example to be this one with under collateralized loans and having the data from on-chain and off-chain put into a single, let's say, data lake from which you can actually draw some conclusions. And yeah, it's a totally interesting experiment for us. And the best thing about it is the fact that even when talking to regulators about data and about financial innovation, you see that initially there's a certain, this will not work. And once we started pushing more into the data side of things, so listen, you have the data, which is the on-chain data, and you can actually verify because blockchain is transparent. You can see everything, the whole history of this user, and then you can pair it with the history that he has in the traditional financial world with his credit score, with his everything, and then you can offer him, let's say, better rates. You can offer him customized services, customized financial services, different cashbacks, discounts, etc. So they started a bit seeing this as a way in which they can improve their products and also add on top different features. But it's important that the data is heavily important for them. And yeah, like both Mark and James were discussing earlier, the tooling is the key.
Thank you so much, Edward, for the intervention. And yeah, I fully agree that here tooling is important to enable all this data to be properly monetized, and also not to fall into the malicious actors' hands or into the wrong hands, so to say, and be again not necessarily used in a bad manner, but kind of exploited like we have seen in Web 2. It can go again back against the user if the user is not aware of its capabilities and just uses it as they use DeFi so far, which a lot of the retail users just do not understand where the yield is coming from or how the protocol actually works, and just they just see some APRs and just tap into them because of course the financial gain is there. So the risk is there that data would also fall into the wrong hands because they will offer the best APR for it or the best incentives or rewards. So definitely agree on that one.
It's quite telling that the data that the users look for, APR and APY and all this type of thing, is exactly the sort of thing that you find around gaming sites and not around financial services sites. And until it starts to become more about the long-term value that people are going to be able to get out of investing in projects and holding onto them for years at a time, it's not going to have that boom moment. So that's the mass adoption that we want. We love our financial services. It will still be a huge number in the center of all of this, and DeFi will be a huge portion of what we do, but we are here to enable everybody else, not to be the center.
Definitely. This reminds me of a story of how, for example, Ray Dalio was at a centerpiece in enabling McDonald's to offer chicken nuggets. It's a financial story at its core, because McDonald's had an issue because the chicken prices was too volatile for them offering a cheap product like with the McNuggets. And they tapped into Ray Dalio's experience to create a market, futures market for them, to be able to kind of hedge their risk or hedge the price volatility of chicken. And thus, with that market created, and of course, with all the efficiencies that come with the financial system, traditional financial system, they were able to get the McNuggets at a price that was in their price range, affordable price range that they wanted to offer for the mass consumers. Without it, the chicken McNuggets, as we all know it today, wouldn't have been possible. So I really think that DeFi should go into a similar mindset and not focus on the APR or the gains or the amount of value that it can extract or give back to its users, but more so on enabling such use cases, on making things more efficient into the real world, on making payments more efficient, and enabling users to borrow capital at a better rate than they would have ever been possible, or lend it out.
It's really tricky though. It's a really tough line to walk there, because the early curve adoption for all of our projects is degen, the types of personalities that are into this, that really want to jump onto these projects very early. And they don't have the same requirements as institutional capital that we want to come in and invest. So we want PGGM and APG, the two huge Dutch pension funds, to bring the money from all of those people into the 1001 real use case problems, the on-chain carbon entities and that type of stuff, and really, really help with that. For them to do that, they need the tool sets in DeFi that they can control the risk with. But they're never going to come in until we've proved that with the degen space. So we have to do it for the degen space in a low permission, open environment area, and then work out how we transition to bring those entities into a place where they're willing to play at the same time. And that's a really hard thing. And it might be that they want their own walled garden on technology that's been proven, or there's lots of different solutions for it. But we have to face the market that's here to show that our systems can work. and have a roadmap for how we think we're going to turn this into scale that really brings money in and grows the pie rather than just moves it around inside. And that's a really hard product balance.
Definitely. This is a really tough question. And going back to the data issue, so to say, that we just discussed about it, I wanted to move a bit to the next question. And I think it's kind of ties well into the discussion on how we can slowly migrate from this DeFi anonymous degen environment to a more mature space where institutions come in that do want to be transparent, that want to play by all the regulations possible and be as safe as possible and play it by the book. So here I think one aspect that it's kind of knocking on our door, so to say, here is that, for example, you regulators are looking to utilize ZK technology to preserve privacy and data ownership principles outlined in the GDPR principles. So I would like to direct the questions back to Ahmed a bit here and to ask him, how do you think this GDPR principles apply to blockchain, even with or without ZK technology, can affect the advancements of DeFi in a negative way? And how can we solve it? Because we've seen that a lot of the DeFi that we know today and love is built by or for anons, as or degens, as David said. And I think here we need to be very careful on how we blend the two worlds, because it can break protocols very easily if we say you have to abide by GDPR principles, and we know blockchain is immutable, and thus it can be a make or break situation. So what are your thoughts on that, Ahmed?
Well, I think that the utilization of zero knowledge technology by EU regulators does not necessarily have a negative impact on decentralized finance. So, like, on the contrary, like, ZK technology has the potential to enhance privacy and security within DeFi protocols. So it enables the verification of truth in a statement without divulging sensitive information. And this capability proves valuable in preserving privacy during transactions and data sharing in DeFi applications. So through the use of ZK proofs, individuals can demonstrate ownership or eligibility for specific services without really revealing personal details. So the incorporation of ZK technology aligns with the objectives of maintaining privacy and safeguarding user data as mandated by the GDPR. And by adopting ZK technology, like, DeFi protocols can establish a robust privacy framework that adheres to regulatory requirements. And this approach empowers individuals to participate in DeFi while maintaining control over their personal information. So I think that the utilization of ZK technology represents an opportunity for the DeFi ecosystem to proactively address potential challenges and collaborate with relevant stakeholders. So by embracing privacy-enhancing technologies and engaging in constructive dialogue with regulators, I think that DeFi can evolve in a privacy-conscious and compliant manner. So this proactive approach ensures that DeFi remains aligned with both user privacy expectations and also regulatory mandates too. So yeah, let's say that those are my thoughts related to it.
Okay, thank you so much for the insight. Anyone else that wants to jump in on this topic?
Just to, having contradicted him earlier, going to fully support everything he's saying, Hamid, on that. But it's really interesting when you're talking to non-crypto native users about how they can integrate and work with us. If you say blockchain, if you say crypto, the shutters come down. It's got this reputation that puts people to look for risks already. Whereas if you talk to them and you say you can use zero knowledge proofs in this scenario to enable your disparate systems to talk to each other and communicate and can confirm data, then they get really interested that they've got shortcuts in there to bring together systems that they've not been able to integrate very tightly. And the whole language that you were using there, Hamid, around zero knowledge proof as the basis of it, choosing those words, finding our language in the right way, talking to regulators and talking to institutions in the right way, is part of this adoption messaging, and it's very much on point for how we're going to bring them in. So we've just got to really be careful how we pick that language and how we describe ourselves.
Definitely. And just to add here, I think the EU already made one step from what I've seen. They are considering using the ZK technology already in kind of creating a framework for every EU citizens to be able to tap into DeFi, to have like maybe even a digital ID or digital footprint, since we talked about it, protected by the zero knowledge proofs. And then you are respecting the principles outlined by the GDPR policy, but you're also being able to stay anonymous on the level of the blockchain if you so wish to, or reveal data only to a select parties that you choose to, and not to everyone at once. Because I think this is one of the broad points on why blockchain and crypto is frowned upon in general by the general public, is that once I am on blockchain, I'm visible to everyone, and I'm a bit naked, even though it's like this shower curtain where they can see my silhouette. But at any point, if I do a mistake, the shower curtain is pulled off, you know, and you're revealed. So your data is out there into the open. It's for everybody to see, and it just has to connect a few dots to be able to identify it properly. And we have already seen it that chain analysis and other types of tools are already successfully doing so, even with privacy preserving chains, like for example Monero or Zcash. Yeah, so I think this is going to an interesting direction. We'll have to see how it gets implemented, and as we all like to work out the details of how can it be maybe even exploited by the government, because that's another question that is on the lot of the on the back minds of most of the crypto native users, how it actually can the government or agencies work against me a bit. It's this reluctancy at some point to adopt new technology.
Share a story here, just
Sure.
talking to people in the place where they might be willing to exploit this type of stuff. There was a concept on Ethereum. You can go and do Ethereum domains and get an Ethereum ID, and you can do a whole bunch of transactions, and people can kind of look up and see all the wallets that are associated with you and see everything that you've done. Now, if that same person also has a bunch of activity that's off-chain, and so there's off, you know, away from that domain that they're doing through a separate set of wallets, if they accidentally send something to a private address from a centralized exchange that's the same as that they would have used from their more public wallet, suddenly every single one of those transactions becomes associated. So there was a suggested attack that would be used on, say, some of the people in Russia, and with everything that's going on at the moment, that there are known sets of wallets that have been taken and captured, or that have had some bad behavior in them, and that are associated to that. And there are public wallets that these people have. So just to send from those, and attach this bad set of behavior that can then go and disrupt within the government, or go and disrupt within those people, and say, look what this person's been up to. Look at the activities that they've had, because you can then go and send to that private wallet, and they've got no easy way of proving that that wasn't them that was associated with that poor set of behavior. So I was in a conference session the other day, and there were some people from that sort of world involved, and we're talking about how they can build those attack vectors and build those data sets to use those to discredit people and discredit people's behavior in the future. And I just think that's really the interesting other side of anonymous data, is that if you're partially on, partially off, how do you prove that that wasn't you? Is as difficult a problem as proving that it is.
Definitely. I think that's a very interesting point, and it's worth exploring and monitoring a bit how it evolves, because definitely it's a double-edged sword, this anonymity in blockchain. It can do a lot of damage, and then your reputation is kind of tarnished on-chain and off-chain, because you're associated with certain activities that you do on-chain. But it's a good thing that people are free to do not whatever they want, but to do all the activities without interruptions, without too much inquiry into their own privacy or own motives. If you want to transfer cross-border hundreds and millions of dollars, you can do so at the click of a button through any blockchain technology today. And it's giving power or empowering people so much. I want to speed things up a bit because to get to the last question, and I think this is a question addressed to all of you, so maybe a quick round the table answer, starting with James, since we want to talk a bit about mass adoption and how DeFi currently is kind of playing a sort of catch-up game with traditional finance, where startups are trying to offer a decentralized version of financial concepts already existing in TradFi. Now, what would be, in your opinion, the vertical where DeFi has an edge to traditional finance, and it kind of could offer the killer product that we could unlock mass adoption?
Okay, so I think the most obvious one is settlement speed. So the reason that so much capital gets locked up in financial systems at the moment is because of settlement risk between different entities. So if I'm Credit Suisse, I've got a $40 billion balance sheet because I have to hold that against assets that may or may not settle on the other side. We can do all of that much quicker in stablecoin. We can probably reduce that capital requirement to 10 billion. If you think about that multiplied across the rest of the ecosystem, and how much capital that puts back to go into investment projects rather than just sitting to protect against trade fraud, it's enormous. So I think that's where stablecoins are magical, but they can only work if there are derivatives, if there's clearing, if there's collateral, if there's lending. All of the rest of the stuff has to be built. But when we get to the end of that, suddenly there's an enormous amount of money that can be unlocked and become useful to society rather than just insuring risks.
Thank you, James. The floor is yours, guys. Who else wants to tap into this question?
Another edge would be the financial inclusion side. So DeFi is for the unbanked and for the underbanked population. Even with the tools we have now, they can be offered to virtually anyone that has access to a computer, has access to a mobile phone. So that's one of the most important things for the moment.
Thank you, Edward.
In general, I absolutely agree with James in terms of the settlements, though I don't think that's the part that's going to bring mass adoption, because we are talking generally about the very large transactions. But what I think is it's not a killer feature that's going to bring mass adoption, but the fact that users would be able to trust and be safeguarded on the current solutions. Loans is an area that, for example, for normal users, it could be far less bureaucratic, far easier, but it's not possible unless there's proper trust and safety in terms of the measures. That's what it's seen in projects that failed recently. But the one thing is that cross-border, anything that is involving multiple parties, large settlements, that's where there is a lot of pain points in general, and crypto solves that entirely. The fact that it's cross-border on its own does that.
Let me chime in quickly, Mihai. Thank you. We're running out of time for this panel. I'm sorry I have to interrupt, but thanks, Michael. Thanks to all the panelists for this wonderful deep dive on DeFi. We will now jump on a 15-minute coffee break and meet again at 1:30 p.m. UTC with Knights of Cathena's exciting keynote on Web3 gaming. I know which cup I will be using for my coffee. Okay, make sure you will do the same. And as you already know, you will find the next session under the Sessions tab in Zoom. By the way, if you haven't registered yet for today's event lottery, you will find the link and the instructions on the lobby chat video, okay? Also, you can now check out the expo area to visit the breakout rooms of our project partners or use the lobby chats to network. Have fun and see you in 15 minutes. Bye, everybody.